I paused it by accident. Thank you for that. Thanks for letting me know. All right. So the economic data this past week has just been absolutely abysmal, and something that I go live every most mornings, but in particular Thursday nights and Sunday nights, and I've been talking about inflation, going over the charts of agriculture, industrial metals, gold, silver, for a couple of years now. We've been talking about inflation, the TIPS, Treasury Inflation Protected Securities. Finally, the government now admits that there is inflation out there. And they even did it with the Consumer Price Index, which is a rigged number. If you want to use this number, simply double whatever they're reporting out there, because this is not the same number or the same formula they used to calculate CPI back during the stagflation days of the mid to late 70s, early 80s, up until 1982. That's when the new bull market began in stocks. So this week we had the CPI come out, the headline number, that's this one here, the top line. The market had expected, or economists, the economists had expected a read of 0.2, actual 0.8. That's what they admit. On core CPI, that's when they back out food and energy. Why? Because they can. They're the government. Inflation at the food and energy level was just simply en fuego. They knew it was going to come in hotter than the headline number. Actual, spot 9% versus spot 3%. So more than double the expectation. And then you fast forward to today, you had the producer price index come out. And it was double the expected read. So CPI came out the hottest since 2009. PPI came out the hottest, a 1 month move, since in about 40 years. Many viewers weren't even born back then. So I remember it. Unfortunately, I'm that old. But inflation is not a good thing to go through. Stagflation is where we're at. Stagnant growth with inflation. And it doesn't help that you have the government paying people not to work and not to produce, only to consume. So if you go to if you have a pool, if you go to your pool supply store, I don't have a chlorinated pool. I have a saltwater pool. There's no chlorine. There is no chlorine. People have to use shock to shock the water temporarily. PVC, I need to replace a couple of pipes. There's no PVC. Can't get these specific pipes to replace. It's going to take weeks. So you have a backlog of demand and a lot of dollars chasing that demand that's there, or chasing the limited goods that are out there, driving up prices. So what's the Fed to do? They've already said what they're going to do. Full steam ahead. More printing, more spending. Dilute the dollar. So the question that you should be asking is, with all of this wealth of knowledge and you've been coming out here all these weeks talking about the impact of inflation and your position on the market, what have you been doing this week? Folks, we've been short. We've been short the market. We added to shorts this week. Those positions are profitable, except the one, because fellow member Pat, if he's out there, jinxed me on it. I sold deep out of the money, naked calls. He went in and bought and then sold covered calls. I call that a jinx. I'm getting off track. I blame Pat if I happen to lose money on this trade. Anyway, we are short. We are long of commodities. I'm going to go over the weekly charts in a moment. I'm going to share with you one commodity that we added to this week, new position. Of late, since April the 1st, we've been doing a lot of options trading to try to stay market neutral. We're now becoming more and more directional in our bets and now beginning to accumulate shares yet again, because now we're seeing value. We're beginning to see new bull markets emerge. So we'll talk about that in a moment, and then we'll segue over into stock chart requests. So let's get to the weekly charts. Our train. Hey, Bob, Coinbase missed on earnings. Smash that, smash the like button. Awesome. You got me on that one. Let me check out how they're doing. Good old Kathy Woods, probably. She's got a bottle up to her lips right now, probably. They reported today. Looks like it was priced in, whatever they reported. They beat on EPS with their revenues. All I care about are revenues. Revenues rises to $1.8 billion. Wow. Wow. Huge revenue beat. I shouldn't say that. Huge revenue gains year over year. That's incredible. Wow. Profits rises to $771 million from $32 million a year ago. I feel like buying Coinbase right now. All right. Good stuff. I really do feel like buying Coinbase right now. We're going to check out that chart. Let's add that to the list. I like the fact that there's not a lot of price action after hours. That means that buyers are shy at current. Good. They're not selling the news. Good. So let's add coin to our list of watch stocks. Our train, thank you. All right, let's take a look at the weekly charts. Okay. Each week, I like to talk about the monthly chart of the yield curve. For those folks not familiar, the yield curve, it's a measurement of the movement of the 2-year Treasury yield versus the 10-year Treasury yield. When they are rising, they're going in the right direction. When they are declining, they're generally going the wrong direction. They're getting too tight together, and where you should be getting paid a higher yield going out long term, when ultimately you invert, as we did in mid-2019, that is the yield curve inversion. That doesn't mean you go selling stocks. It just means you probably have a recession in front of you. What did we have? We had a recession. We're still in a recession. They don't want to call it that anymore, but we're still in a recession. So when the yield curve steepens, meaning rise up, that's when you got to get nervous about stocks. And overlaid here in blue, you have the S&P 500 overlaid to show the price comparison. And you could see that every time during the dot-com bubble, the financial crisis, every time the yield curve steepened, stocks cratered. I don't believe in it's different this time. Whenever I hear that, I usually go the opposite direction. So this month, I know this is hard to see, but this month, at current, I know it's early in the month, actually mid-month now, we are flashing a near bullish key reversal. This implies to me, were we to close out the month right here, right now, continuation move up higher next month, what does that mean for stocks? It ain't good. It ain't good. And let me segment it out. It's horrible for tech stocks. I mean, dismal for tech stocks, semis in particular. Now, in an economy where you didn't have the Federal Reserve printing $120 billion worth of new debt every month, or buying back new debt every month, and helping finance trillions upon trillions of dollars in new spending, well, you could be long of energy, you could be long of banks, you could be long of a couple of other sectors out there, industrials, transports. The problem is now, with the specter of inflation out there, what do you do? What do you do? The input costs for all of these companies are going to go through the roof, especially the transports. So what do? Me, I'm looking at commodities. That's what we're looking at. And we're looking at shorting the market because history has shown us, and I am a student of history, that once you get a real steepening of this yield curve, stocks begin to roll over. So I don't believe in it's different this time. Let the talking heads on CNBC take parking space up in your head with that gibberish. I'm not believing it. Let's go to the weekly charts. Bonds, TLT, 20-year Treasury bond ETF, weekly time frame. I kind of figured this was a dead cat bounce with this bear flag setup. And of course, we have now broken down. One trading day left to go. Anything could happen here. Maybe we'll rally back. We'll go to new all-time highs tomorrow. Highly improbable that we are going to close positive on the week. But we're open-minded. Volume, very heavy. So when you see the 20-year bond declining, that means yields are rising. Tech stocks hate that. And normally, your Dow Industrial names, your large cap, old, stodgy value names, cyclical names would like that as well because rising yields is a signal that the bond market's saying, listen, you got growth here. There's growth. You're going to need copper. You're going to need steel. Now we have inflation before we even have any growth. So, and you may say, Bob, what are you talking about? We had GDP growth that killed it a couple of weeks ago. Yeah. Why? Because we had a shot of adrenaline shot into the economy by Treasury vis-a-vis the Federal Reserve. That's not organic growth. That is voodoo economics at its worst. Matt Carter, hi Bob in chat. Sorry, I'm at a function tonight, but I'll tune in later. Check out AMC. All right, you got it. You're too funny, man. Tried to rip faces off today. Thanks. Always bullish on Bob. Take care. See you Sunday. Thanks for checking in, McCarter. That's too funny. All right. The yield. We are up on the week. We have faded resistance at 1.7. We have the 52-week high at 1.74. Stokes are rising above 80. Very bullish. Daily chart. That's not a daily chart. It's a yearly chart. Let's bring up the TNX. This is the 10-year Treasury yield, but in candlestick format. Obviously, a pullback on the day. But we have broken out on yields. You can see on this weekly chart where at current we are above the upper band of this bull flag setup. It means nothing on Thursday night. What matters is by 4 p.m. Eastern Standard Time tomorrow that we're trading above that level. I don't necessarily want it to happen. It'll be good for my shorts of the small caps and some of the shorts we put on of the real big beta names. But it's gonna hinder a bit our larger positions in commodities, in particular gold, silver, the miners. So jury's out here. What we're gonna do this week? One trading day left to go. Tips, weekly chart, bearish reversal bar on the week. Now, the daily chart is not as ugly as the weekly chart. We are at daily support. I was going to put money to work in the chips. I don't want to keep it in cash because I don't think this dollar rally, we'll go to the dollar in a moment. I'll comment on it more. I don't think it's going to last. Daily chart. Yeah. Tips bounced off a daily support today. Closed up on the day after being down. Stokes a week. Volume just above average. So I'm looking to get out of dollars. So I'll probably park some of the capital that we have in reserve in the tip market. So members, more to come when we make that move. Speaking of the dollar, weekly chart, a strong week. I can't knock it. I mean, we opened down, new weekly low, and at current, we're right off the highs of the week. And volume, there's no volume here. Dollar bull ETF. Volume's going to roll in light. And I want you to take note on the dollar bull ETF. We'll validate on the Dixie in a moment whether or not this is holding true for the Dixie as well. But we're going to have probably next week the earliest, the following week the latest, the 50-period moving average on a weekly time frame crossed down below the 200-period. That's a major, major event. Now, the last time we did that was back here. It didn't matter much back then, but the Fed was raising rates at the time. Or rolling off their balance sheet, I should say. Back to the weekly chart of the Dixie. That negative crossover on the Dixie has already happened on a weekly chart. So this 50-period moving average is going to act as a declining ceiling on the U.S. dollar. And believe me, I'm a patriot. I don't want to see the U.S. dollar get annihilated. But folks, you know, you keep printing something that has, if you keep printing something out of thin air, it has no value. Now, you can see that what was support back here is now acting as resistance on a weekly time frame. Tomorrow's going to be an important day for the dollar. Daily chart. We eked out a gain on the day. We were lower at one point. I don't think this is going to hold. I think what we have here is simply a dead cat bounce. I know a lot of you are out there like, what the hell is he talking about the dollar so much? The reason is that if you're going to trade commodities, remember that most commodities, if not all commodities, are traded in U.S. dollars. And certain commodities react differently when the dollar goes up. Like gold is like almost the exact inverse, whereas natural gas doesn't care what the dollar does because we produce so much natural gas here in the States, it's immune to the dollar. So you can see that we are up and into resistance, but in fact, we did recapture support this week, or last week, I should say. Oh, excuse me, daily chart. We recaptured support yesterday. Today, we held it on a retest. So, strong U.S. dollar this week. And it did impact our gold mining trade and silver mining trades, the Vixx. We broke out on the week. Will we close above 20? Jury's out. We're well off the highs of the week. Stokes are hooking up. They look really, really good. Excuse me, RSI's hooking up. Looking really, really good. Too much caffeine today. Stokes hooking up. Way too early to make a call here about whether or not they're going to break out higher. To equities. Okay, so the last time we spoke about the Dow Transports, we had RSI at around 86, if memory serves me, and you knew it wasn't going to last. It can't last. And this week, a down week thus far, down 1.5%. We have rebounded, but we did put it on our first weekly low in about 5 weeks. Volume's light. These Stokes are sold or bought. Daily chart. Strong day. Very strong day. Volume, not good. Stokes are weak. The Dow Jones weekly chart. Outside reversal bar or a bearish engulfing, whatever you want to call it. But if we close as we are right now, it's not looking pretty for the Dow Jones. So this very powerful move of last week to new all-time highs has been completely negated. Volume light. No volume. MACD very extended. The S&P 500 down nearly 3% on the week. And we were lower. Volume light. MACD is probably going to go negative next week. Daily chart. Yeah, so we see this all the time, okay? Members know that I always talk about waiting for your breakout like we did here on the 6th of May. Then wait for your confirmation retest of support to make sure that what was resistance here now acts as support. In this case, it did not. We broke down. But in this instance, we have the exact opposite, right? We had a breakdown below support yesterday. What did traders do today? They tried to rally it back. Were they successful? No. So what does that mean? You know what? It's light volume. How was volume today? Volume was light. I'm not seeing a ton of enthusiasm on the part of bulls. Were it not Friday tomorrow, I would say that there's a good chance that we fade this rally. The problem is that it is Friday, and shorts like to go home flat on the weekends. So you may get a short covering Friday, keeping the S&P 500 up. But I think in the next several trading days, you're going to get a resumption of some of this selling, unless the Federal Reserve pulls a rabbit out of its hat. I mean, they're damned if they do, they're damned if they don't. If they print money, they create more inflation. If they don't print money, the stock market crashes. What do you do? So unfortunately, I'd love to say that's their problem. It's not. It's our problem. So S&P 500, jury's out. I wouldn't be the least bit surprised to see us just move lower tomorrow, but it is Friday. The small caps, of which we are short and pretty heavily short, and we have been for, what's this month? This is mid-May, about 2.5 months now, waiting. And it didn't help that we broke out the week. This is a weekly chart, no less. We broke out the week of the 26th. And then last week we did a retest of the breakout point and we rallied off of it. I'll be honest with you, folks. You know, I would love to say that I nailed this breakdown this week right on the head. I didn't. On Sunday night, I was live. I'm saying, you know what? Taking a look at the chart going into the new trading week, and especially how we closed out the week strong last week after a retest of a breakout point, I figured, you know what? You got to resign yourself to possibly stopping out of you short. I think that's exactly what I said. So I would love to say I called this breakdown this week. I'm not going to play that game. I didn't. I was concerned. I didn't cover shorts. I was still confident that I was right in my directional call. Why? It's not because of the weekly chart. It's not because of the daily chart. It's because of the monthly chart. All this topping action above the third standard deviation Bollinger Band. and we were stalling. We were losing momentum. We lost momentum. And all we were getting were these short covering rallies that were threatening to take me out of my short position. So the month is not over. I'm not sitting here saying that I called it. For all I know, I may still have to stop out because it's still early in the month. The month is not over. So while it's looking okay, I'm not going to get cocky here. When it starts going in my direction, I get all the more worried. When will I not be worried? When we break down below critical support. Where is that? Right here on the IWM, 206.82. That will make me happy because that means that we've gone from a bull market to now, assuming that we close down below that support level, to now a bear market, a confirmed bear market. And not in a bear market in the sense of you down 20%. I'm just looking at trends. What's the probability of us moving lower? Well, if we close down below 206, the probability of us moving lower increases exponentially. Right now, we're still trading in a range. I can't come on here and say you got to go shorting the market. Can't do it. It's too late. Unless you're going to sell deep out of the money naked calls. And that's what we've been doing that. And the other chart we're watching is a 4-hour chart. So we broke down below this head and shoulders setup this morning. Actually, was it yesterday afternoon? Yeah, it was yesterday afternoon. This morning they tried to take it down. They're defending the support level. So I'm still confident that we're right in our call, but we're keeping an open mind. That's all. The trip cues. We are short of Microsoft now. We were short going into earnings. We booked profits. We got out. We're short again. We sold what strike did we? I forget what strike it is. But deep out of the money. In fact, Microsoft has to make, I think, a new all-time high for us to be in trouble. I'm not going to bore you with that. Anyway, we're short of Microsoft, but we did open up an offset trade. So when Microsoft broke down, we sold a deep out of the money, 2 standard deviation out of the money put option to offset that. So we're kind of neutral on Microsoft at current. That trade's working out pretty good. So the Qs, they've broken down on the week. We haven't closed here yet. We could rally back to recapture the support level by Friday's close. Volume is rising sequentially. Why? Interest rates, folks. That's what's killing the Qs. Daily chart. We're probably going to rally here. We hit the 3rd standard deviation Bollinger Band. I wouldn't be the least bit surprised to get a rally, maybe up to 325. That'll probably put us back above support on a weekly time frame. Where is that support level? Yeah. 325. So the question is, if we rally tomorrow, do we fade? From my perspective, I hope we fade as a short, but we'll see. The banks, a down week. It just goes to show you that while the banks love rising yields because their net interest margins expand, if the overall market rolls over, the banks are going along with it. So the banks are down not as bad as the overall market, down nearly 1.33%. They closed up on the day, but notice, we broke down yesterday. What did we do today? Attempted to recapture. Do we fade? It's quite possible. Technology, big breakdown this week. Very similar to the Qs. Volume, already well above average. The semis, annihilated. We are down over 7% on the week on the semiconductor sector. On volume, no less. Daily chart. There should be a trade in here somewhere. Yeah. I think they're going to rally the semis albeit briefly, they're going to rally the semis. The only thing that can keep that rally going are yields pulling back. Biotechs, rough week, new weekly lows. This is becoming interesting. Franken thinking about opening up a deep out of the money strangle on the biotechs. But I'm talking like 2 standard deviations on the call side and on the put side, like way out of the money. Daily chart. Nice consolidation here. We're probably going to rally on the biotechs. Consumer discretionary, absolutely annihilated. Down over 5.5%. Retail sales come out tomorrow, folks. We should rally. We should rally. We closed down yesterday below the 3rd standard deviation Bollinger Band. Doji star formation today. That's a sign of indecision. We should pop up higher tomorrow. Unless retail sales are just horrible. Energy. We booked profits on our ExxonMobil trade, and they continued lower, so we're out. I'm going to go over that chart in a moment because I want to buy back in at a decent support level. We'll talk about that. So energy is down about 3.25%, holding the 200 period moving average on a weekly chart. Big volume. Daily chart. They rallied back today. They did close down, right? Yeah. Closed down nearly 1.25%. Nice bounce back. Lower highs on MACD. Emerging markets. All right, so the method to our madness, longer term, setting up our portfolio for this new reality that is stagflation, is not to focus all too much on U.S. equities. But my attention is now going to be going towards emerging markets. In particular, Vietnam. Vietnam is now the 6th largest Asian manufacturer. Liz Ann Saunders sent out a tweet. I'm going to share it on Sunday night about how Vietnam is just ramping up dramatically as one of the largest producers of goods as the supply chain shifts from China to India to Vietnam because of the COVID nonsense. So as it stands right now, you can't buy any of this stuff. They're very volatile. The dollar's strong. That means weakness for emerging markets. I expect lower lows here, especially if the overall stock market in the U.S. continues lower, because whatever is diversification during a bull market, it all becomes the same direction when the bear market hits. Everything goes down, with the exception of bonds, dollar, gold, stuff like that. But otherwise, the emerging markets will take it on the chin along with the U.S. markets. But from a longer-term perspective, valuation-wise, emerging markets are your better value. U.S. stocks are way too expensive. So we're looking for the pullback in emerging markets to back up the truck on EDC, on Vietnam, on India, Brazil. That's where we want to be. Commodity producers, Brazil, industrial producers, EDC, Vietnam, India. They're not so much commodity plays, Brazil is. Even Australia. Here's BRZU, Brazil, a down week. Not horrible. Oil, down week. This is why you're seeing energy weak. Your large caps weak, because by and large, energy trades with oil. They trade in tandem, lockstep. And it's also a psychological factor. If oil is weak, there's a perception that the economy is weak. There's not enough demand. So what happens to the industrial names? They don't perform as much. So that's where you're seeing weakness across the board. Higher yields, higher dollar, and weak oil. Gold, about flat on the week. 1850 has been really stiff resistance for a while. It was hardly support when we hit it last. So it may take another week or so to break through here on gold. But I remain bullish. Daily chart. A reversal day today. And we went over this chart earlier with members where we're bouncing off of support, at least on the GLD. We're not quite there yet on spot gold. So we're still bullish. We'll remain long. Gold mining stocks, rough week. Rough week. Daily chart, not much really to talk about. I don't even want to look at the chart, to be honest with you. Daily chart. Now you can see that the GDXJ is approaching daily support. To me, this is a buy signal. Volume today was very, very light, very important. I think we're hooking up. I think we're going up higher here. If not tomorrow, next week. Silver miners, very similar chart action to the gold mining stocks. Daily chart. Big breakdown today. Below support. I'm tempted to go nibbling here. I don't like the volume, so I'm going to back off. I'm not going to do that. AGQ, silver. Down weak. We're holding support. We're long of silver. I want to add more, but we broke support yesterday. I don't want to buy on the cheap. I'd rather buy on strength. So I'm not going to buy any more just yet. ExxonMobil, watch stock. We booked profits yesterday. I think we could pull back further here, especially if oil continues back lower next week. So no great rush to go jumping in on Exxon. Rough day today. But I do like it moving forward. Boeing, we're also watching. I like the 190 mark on Boeing. Stokes on a weekly time frame are trading now down below the 50 mark. I'm going to assume that they're going to close there. If they do, rallies tend to fade. Just like this week. They rallied, it faded. Don't go chasing these rallies, folks. They'll disappoint you. New trade, Boyle. Opening position. Boyle puts you long. This is a leveraged ETF putting you long of natural gas. We broke out the week of April the 26th. Continuation move up this week. We are now long. I think this bear market is probably over and done with. Now we're at the precipice of a new bull run in natural gas. So we'll be adding more to this trade. If you're not currently a member, sign up. 14-day free trial offer. We're also watching coffee. Think about what we've been talking about tonight. We're looking at new bull runs. We're looking at commodities. We're not looking to buy Twitter. That was the old bull market. It's done. It's history. Forget about Twitters of the world. We're looking at commodities, a new bull market super cycle. We could pull back further here. No great rush. Weekly chart. If you want to even get more excited, take a look at, do I have the monthly chart here? No, I don't. Take a look at your monthly chart of coffee. Beautiful multi-year base. And we are now breaking out of it. We haven't closed there yet above the April highs, but we are building a massive W formation. Let me illustrate. A little bit sloppy, but I think you get the picture. Now what we're looking for is a close. We're right there. A close above resistance at around, let's just call it 42. That would be a new closing high. And once we close above 45.50, that marks the pivot point. That's when your institutions are going to be saying, whoa, we got to get long here. But I want to be long before that. We have no position just yet. We've been talking about it. So there's your W formation of coffee. Let's do some chart requests. I think I put everybody to sleep. All right, ticker cloud. I want to go over coin. So let's go over coin. I want to go over Disney as well. Disney reported earnings. Let's talk about that first. We'll go to Disney. I promise to do that. Where we bounced after hours is a very, very critical support level on a monthly time frame. So we closed at 178.34 last tick, 171.20. Disney, monthly time frame. How much time do we have left? About 13 minutes. All right, so this is not reflective of the after hours trade, but we bounced right off of this support level here at, let's call it 168. It was critical support here in February, critical support here in January. It was a breakout point in December. This must hold. They're going to defend this support level. I'll be looking to see whether or not they break. So our alert is set here. Weekly chart. Now here is where that monthly support level is. Our alert is set. We had broken earlier in the week, 182.32. You could see here there's an automated trend line picking up support. This is the value of your automated trend lines. Take them off, put them on. You could see they popped up here in green. We could set an alert here. I'm going to assume we're going to gap down below that mark. If we happen to rally off of this support level and then close above the one I'm setting an alert at right now, that's a pretty bullish event. So we'll watch that. Daily chart. Now, the daily chart, I peeked at this earlier. The daily chart looked pretty good today. Doji star formation, very, very nice. I think that they're probably going to rally Disney off the lows tomorrow, especially given the short covering Friday. So this is going to be an interesting one to watch. A lot of support levels below. You can see how on a daily chart, again, automated trend lines. And for those popping on, TrendSpider, 35% discount code below. You could see automatically within a second where you had support. You have another support level here as well at 175 per share. So my guess is if they're going to try to rally Disney off the gap, if it does gap lower, which I figure it's going to, tomorrow morning, they're going to rally it back off that monthly support level. So Disney, not too bad. Coin. Good numbers tonight. I didn't expect it. So there's not enough data here to have automated trend lines, but I did review this chart the other day, and I looked for a resistance mark by extrapolating out the prior peaks, and you could see we tapped it today. Hard to see with this volume bar here, but we tapped it today and rallied off of it. Let's do a deeper dive into a 4-hour chart, get a little bit more data here, a little bit more texture. Good afternoon session, good bullish reversal bar. 2-hour chart. Very nice outside reversal bar, 2-hour time frame. They're probably going to pop this tomorrow morning. What else we got? Can you check TPL or TPLC? I think TPL, right? Because you rewrote it. We'll look at the Vixx again, Larry. It's worth taking a look at. TPL. Very, very extended. Monthly time frame, very, very extended. Beautiful chart, but very extended here. And we have been for 3 months now. Weekly chart. I mean, it's a pretty chart. It's real pretty. We broke out last week. This week, a nice retest. Holding up well in a volatile market. Daily chart. All right, so we're in a trading range here. Watch this. I'm going to take my drawings off. And I'm going to take off monthly automated trend lines, daily automated trend lines. Now watch. Automatically, it's going to show you the trading channel. Here's your lower band in green, your upper band in blue. Now, we broke out and above this resistance level on the 7th, but failed. And what do? As is typical, we retraced all the way back down to the lower band of the trading range. No great shock. Would I buy here? I don't think it's bad to open up a position. I would stay very small because the only reason why I would do this trade, because I hate the monthly chart. I mean, it's pretty, but I hate it because it's so extended. The only reason why I would do this trade here is because we broke out. We're doing a retest. If we break to new weekly lows and close there, I'd be out. Very small loss. My risk reward here is not horrible. So that's the only reason why I would entertain this trade. So it's a good looking stock. I just don't like the monthly chart. A little bit too extended for my taste. I'm a little bit conservative when it comes down to buying stocks when they're above their 2 standard deviation Bollinger Band, kissing the 3 standard deviation Bollinger Band. I shy away. So that's just my rule of thumb to stay out of trouble. I'm looking more towards the exit door when I see that. Riot momentum stock down to its 200-day moving average, I guess. Monday earnings, blockchain. I don't know. I saw an article. Where is it? It was about the Colonial Pipeline. Did they take it down? It was here right before I went live. I was going to talk about it. I decided not to. They took it down. Anyway, well, no, this is not the article. All right, so Colonial Pipeline, they paid the ransom, which is the worst thing you could possibly do. Now you can expect the utilities to get annihilated. The problem is they paid that ransom in blockchain. I don't know what type of blockchain because the article's gone now. So to me, that's 2 problems. 1, expect more hacking of our utilities. 2, if they can't track that money, that means somebody's not paying taxes, and that will not be allowed. I didn't make the rule. So that's why I don't own any crypto. I used to. I sold it. I made money, but that's why I don't own any crypto anymore. Because eventually the government's going to want their piece. So we'll take a look at Riot. Hey, Norris. How you been, man? I sold it yesterday, Norris, but I'm not an investor like you. I bought it as a swing trade. So I'm looking to get back in. I went over it a little bit earlier on this show. So I still love it. I still have Exxon. I love the yield, 5.5% yielder. I'd like to get a little bit cheaper, but we'll see what oil does next week because we know that oil and Exxon and XLE are going to trade in tandem. Riot blockchain. I would not buy these shares going into, for any stock. I don't buy stocks into earnings. We're right at support at around 1975. Where do we close? 22, I guess not right at. 22.21. So I think we're going a little bit further down here. Weekly chart. I think we're going to bounce really soon. We may overshoot to the downside. 1649. Daily chart. I think we need to touch 1950 at a bare minimum. And I wouldn't buy it in front of earnings. So, yeah, it's due for a bounce, though. But I think you got a little bit more downside to go before you get that bounce. They tried to rally it today, and it was rejected. All right, let's circle back. Rob Y. I saw another article that said They were still using their backups to restore because the restore utility from scammers was too low. Yeah, how could they trust these guys to honor their... I mean, what I heard, I forget who it was, some lady, I guess she's in charge of Secretary of Transportation, but how do you pay? How do you pay terrorists? I mean, that's always been our edict. Don't pay terrorists because you're only going to get more terrorism. But this is just the world we live in. These people are morons. They're morons. They're out of academia. Franklin, yes, Colonial, I believe, paid $3.5 to $5 million in ransom. Yeah, right. All right, let's check out Vixx. You're welcome, Danny. Let's check out Vixx. Norris, you looking for support levels on Exxon? We could do that. You know, here's how I read the VIX. It closed out the day yesterday well above the 3 standard deviation Bollinger Band in green. It's no great shock that we got a pullback today. So even the fact that we made a new daily high is kind of surprising. So no great shock. I think that if we close above 23, 24, that's going to pose a problem for the markets going into next week. Or if they sell it off hard tomorrow, only to reverse it higher, that's an ominous setup for next week for the S&P 500. Elon Musk tweeted out he wants a carbon tax. That's ridiculous. That's ridiculous. So, my take on the VIX, we got to go to the weekly chart. We have broken out, a significant breakout. We're now trapped within a trading range between $22.50 or 23 and $20 a share. We can consolidate in there and then proceed higher. Frankly, I don't like the box that the Federal Reserve has gotten itself into. I said it earlier, I'm going to repeat it. Because if you think about it, it's a major problem. If they continue to print more money, they're taking gasoline and throwing it on the inflation fire. If they stop printing money, even if they slow printing money, the stock market rolls over. So where do I think the VIX is going? I think it's going up higher. May not be immediate, but I think it's going up higher. I think we're at the end game with the Federal Reserve. Unless, of course, they're going to come in and they're going to buy stocks like the Japanese did. It's not unheard of. They'll buy ETFs just like the Japanese. So that would be the next step in their game plan, is to buy stocks. Insanity. So if they do that, goodbye private sector. Let's go. 3-horse exacta box and the Preakness. Bob, 3-5-10. As always, no guarantee. Races at 6:50 on Saturday. Sounds good, Larry. Joseph Gardner, how about a few thumbs up, fellas? Yes, please. Thumbs up, likes, subscribes. And with that, folks, everybody have a really great weekend and a profitable trading day tomorrow. Don't chase the morning rallies. We have some rough seas ahead of us, and I don't want to see anybody get hurt. Thanks for joining in here, and please join us on Sunday night for Sunday Night Futures Live. Speak with you then. Be well.